Yes.
Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.Exchange. Apologies in the afternoon, I did, so I was having cough. Okay, so thanks. Many people are concerned about my health, but there is nothing wrong in my health. It's just a common cold and cough. Okay, now coming back to the market. Last week, the market consolidated. And Nifty, the previous week closed around 21,735 and this Friday closed at 21,710. It's just a loss of 25 points. But intra-week, on Monday, market hit all-time high and Nifty future was trading at 200-point premium, and Friday that premium has come down from 200 plus to 75 point only. And Nifty future crossed 22,000, then came under severe selling pressure and fell about 400 point. Was like, I would say welcome to bull market. Bull markets are always like this, and market will be moving very violently. So many times I told you, now also I repeat, between 2003 to 2007, 5 year, 60 months, that was the greatest bull run in Indian stock market. And Nifty shot up nearly 700% in these 5 years, but within these 60 months, 10 times market corrected more than 10%. 2 times market corrected 20%. 1 time market corrected 30%. And so in bull market, corrections are fast and furious. Yeah. So on December 20, we have seen a huge correction, nearly 500 point intraday fall, and again the first week of December we fell nearly 400 point in 2 to 3 days time, but uniformly we have recovered. So last week it was just a consolidation, and coming week also I am expecting consolidation only, and I am still expecting 21,500 on the downside to 22,000 on the upside. Okay, why? Number one, there are no triggers for the market for next 4 days. However, on Thursday evening after our market close, and TCS and Infosys will be coming out with results, and Friday HCL Technology will come out with results, and Thursday evening the US inflation data will be coming, but mostly US markets will be reacting to this data. And on Friday after our market close, the consumer price inflation data and index of industrial production data will come in India, but that impact will be seen only on the following week. So this week, 4 days, there's nothing very important, and markets will be dancing to the tunes of the global cues and FII buying and this and that. But Friday the markets can make a some kind of a trending may happen after the TCS Infosys results. Okay, coming back to the corporate results, nobody is expecting any good result from IT sector. So you can see the worst performing sector in the last bull run is the IT sector. So in a way it is good, because when people are not expecting any good results, okay, even if they don't declare good results, so it is as per expectation, so the markets will not react much. But in case if they declare good results, that will become a positive surprise, the markets can move higher. Okay, so it is always good that we go to the corporate result season with very little expectation. And even in US, on Friday the corporate results season will start, and I think many top banks will be declaring results on Friday in US markets. So some kind of a trending is possible from Friday onwards, but the first 4 days I think it's going to be a consolidation, but it can be a consolidation with a positive bias. Why positive bias? Number one, the US market seems to be been oversold, the falling continuously for 4 or 5 trading sessions. So there can be some kind of a short covering if there is some trigger. Okay, here for 2 continuous trading sessions, FIIs have bought for a huge amount. I think Thursday and Friday put together, FIIs have bought for 3,000 crores. So usually when FIIs are net buyers, the markets tend to be having a bullish view, bullish bias. Right. So this is the thing. Now if you come to open interest, so people are not expecting a bigger move because of last week 1 week consolidation, and people are expecting next 1 or 2 weeks also to be consolidation. So that is why people are taking 21,700 short straddle and 21,700 call, 800 call, 900 call, 22,000 call, 21,700 put, 600 put, 500 put. So there's a selling everywhere. So if you see a selling across the board, both calls and puts, that means people are expecting a range bound move. Even in monthly options, people are taking 21,700 short straddle. The combined premium is about 500 point, so not 500 point, about 300 point. Okay, so that shows that the range is 21,500 to 22,000. So whichever way you look at it, okay, so it is indicating a range of 21,500 to 22,000. And of course, the recent high is about 21,800, 2830 like that. So when that is taken out, so there can be a further upside move up about 200 point, then 22,000 will be the ultimate resistance. So you can say 21,800 to 22,000 is a resistance zone, and 21,500 is a very good support zone. And in fact, since the last 2 months, the markets were moving very vertically, the option premiums were fantastically high. And in the last 1 week, if anyone would have sold 500 point down put option, 500 point call option away, they would have made fantastic profit. So a lot of option sellers made fantastic profit in the first week of January. So that's although market started with a negative bias as a bad omen, consolidation is really good for option sellers. It's a good omen for them. So I wish all the option sellers a great year in 2024, and I wish myself also, because I am also an option seller, not in India but in US markets. Right. So in a nutshell, in few words, bias is bullish because FIIs are buyers, and you can expect sideways move for next 4 trading sessions. Then after that, a trending is possible in the 3rd week and 4th week of January. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.